Good morning, Paul Georgie from Allendale. It's October 7th and Friday morning. Well, we just got the unemployment numbers out, and they are positive to the stock market. Showed we put more people back to work last month. They adjusted the August number up as well. So we're seeing a reaction initially here in the dollar. The dollar has gotten weaker. The crude oil has rallied up 100 points as we speak, and the stock indexes are all showing higher. That's suggesting a higher opening in the Dow on Wall Street. So with that, we'd expect that we could see a little bit of support here in the grain markets if they were going to open now. We'll have to see where these markets are when at 9:30 when the grain markets do open. But when looking at the grain market specifically, we'll get some more numbers out today from analysts on the yield projections, what they expect the USDA to put out next month or next week, next Wednesday morning at 7:30 when they come out with the October supply-demand numbers. But I think the focus right now, as far as trying to find some fundamental support in this market, has to come from the demand side. We're in a time period where yield harvest is going on, and there's plenty of supply around, but we have to see some demand come in here. China is on vacation this week because of their holiday, and they should be back next week. Hopefully we'll see some demand show up there in the corn sector, or at least in soybeans. We would expect that they'd be purchasing some soybeans and some release of that information. But the demand side of the equation is where we need help right now in order to stop this slide in prices. So something to be focused on and monitoring here very closely. We've seen some rebalancing by funds in the markets here yesterday. The question is, will they be back here today? That kind of puts some pressure on the wheat market and the corn markets yesterday after opening sharply higher. We'll see where we come in there today, but that's something we're watching very closely. The euro dollar seems to be, or the euro currency, I should say, is the market to follow here. That whichever way that moves seems to have an impact on commodity prices in general. And there has been comments out of the EU that the EU will provide credit to any bank and that needs money. They don't want another Dexia to happen over there, so they are continuing to allow the loans of unlimited amounts, as the news story was talking about here this morning. So looks like things are calming down a little bit over there. We certainly aren't out of the woods, so we'll have to monitor that very closely. The key technically that traders will be watching here today, if corn closes higher, we will see the first week of higher closes since the last week in August. So that will be monitored here right now, or as of Thursday's close. We're up about 13 cents in corn, down 15 cents in soybeans, and up about 6 cents in wheat. So those are going to be key numbers as we go into the close, as far as the technicians to be watching where this market closes here at the end of the week. In the livestock trade, cutout values up 58 cents in choice, down 20 cents in select. Hog cutout values were down 20 cents. Not a lot of news going on in the cash market in the cattle. In the hogs, we've seen a lot of strength there, and that certainly could be coming from harvest weather. Producers are in Iowa, Minnesota, focusing on getting this corn crop and bean crop out of the field as the weather is extremely nice. But what that means is that we're probably backing up a few hogs and expect that we could see, whenever we see a rain cloud coming here across the Midwest, the upper Midwest, we'll see some hogs moving to market and probably press this cash market. But until that time, we're expecting cash to stay fairly firm in the pork complex. Technically, we're near resistance levels in the both cattle and hogs, and seasonally we could see lower prices in the hogs. The cattle are battling cutout values. Packers' margins are deep in the red right now. They're not going to continue to slaughter the number of cattle we need to slaughter in order to stay current, especially when their margins are deeply in the red, and the product doesn't seem to have a lot of strength under it right now. So those are things we're watching here at Allendale. We'll definitely keep you informed as we learn more information. We wish everybody a very successful trading day, and we'll talk to you on Monday morning. Thank you.